American Express out with first quarter results last hour. The company reporting a pretty big bottom line beat on revenues that match analyst expectations. Amex also affirmed its full year sales and EPS guidance. For a deeper look into these numbers, what they can tell us about the state of the consumer, we are joined by Alexander Yokum, banking analyst at CFRA Research. Alexander, great to have you with us. You know, what struck me initially was the big beat on EPS that Amex had, but they didn't raise the full year in a commensurate fashion. What do you think is behind that?
Yeah, thank you. Thank you for having me on. Yeah, I mean, generally speaking, I would say credit quality was really strong this quarter. You know, if you look at American Express compared to other credit card issuers, they have the best credit quality. And they have the smallest proportion of their revenue tied to credit quality, you know, just over a fifth. But their credit quality is still better than 2019 levels, right? Where if you compare them to other credit card issuers, they're seeing 20, 30, even 50% worse credit quality than they were relative to 2019. In terms of their guidance, we think they're being a bit conservative on that. They still have seen a bit of weakness with small businesses, right? That growth is still a bit light, but we would say they actually are seeing additional clients, right? So the amount of cards they have are going up. It's just that the spend is a bit weak as those small businesses are struggling with higher interest rates.
It also seemed like the new accounts that they are opening, they tend to skew younger. What does that tell us about how American Express's customer base is changing?
Yeah, that is a really good sign. If you think about American Express in the 2010s, they really struggled with the younger cohort. You know, they were sort of assumed as the card of your parents, not necessarily for, you know, the younger cohort. So that has changed, right? 60% of their new clients are younger, and that's positive for a couple of reasons. The first reason is, you know, if you can spend the marketing dollars now and get that customer, you know, you can have them for decades, right? So it's a very good value proposition, and they tend to have retention rates above 90%. So the customers tend to stay. Another good benefit is, you know, younger customers, they tend to see bigger salary increases, right? So you can see increased spending over time without even getting new customers. And then thirdly, American Express, you know, previously had been sort of known for not being accepted everywhere, but that has changed, right? American Express is now accepted more places. So whereas older cohorts often don't use their American Express at certain places because they're afraid it won't get accepted, younger cohorts, especially Gen Z, they'll just use their card everywhere. So the amount of wallet share has increased for them as well.
There's an effort to cap late card fees. Alex, and I'm wondering how you think that could impact American Express.
Yeah, in terms of that, you know, we're not necessarily too concerned. That's definitely an issue more for the lower end credit card issuers. For American Express, it's just not that big of an issue.
Is it because the revenues from fees are so low?
Yeah, so if we're talking about like late fees, yeah. In terms of annual fees, they have, you know, substantial annual fees, and that's something we would expect to continue to rise and really be a good revenue driver, especially in the second half of 2024.
Why do you think the stock is down pre-market, sort of reversed?
Yeah, so we think there might be a little bit of negativity towards spending. So spending did come in a little bit of a light compared to expectations, but we actually thought spending was fine. It was still an increase from last quarter, and there had been some negativity there because each quarter we had seen decelerating spending, whereas this quarter we saw a bit of growth. But January was a bit weak, right? We heard that from Visa and MasterCard. You know, there was extreme weather in January, which really slowed spending. So we think that might be being a little bit over-exaggerated. And then, like I said, with small business spending, that is still down, but card growth is increasing. And we think card growth is the #1 driver there. You know, in the long term, if you have the clients, the spending will return.